Hi friends, welcome to Adda 24/7. We are in the Scholar series for ABM. In this we are covering the important objective questions, important theory, as well as the important numericals. So follow the series completely. Okay, let's start. So now let's look at this question. Which are the important components of Pillar 2 of Basel 2 framework or supervisory review? So you can call this Basel 2 or Basel 3 also. Both are same. See here. In Basel 2 and Basel 3, nothing much has changed. Only the severity has changed. You can call it Basel 2 or 3 both. Okay. So which are the important components of Pillar 2 of Basel 2 or 3 framework under that is supervisory review. Okay. So what are these? SREP and CRAR, ICAP and SREP, CRAR and ICAP, SREP, CRAR and ICAP. So now what can be the answer? Now before going on to the answer, you need to understand something, right? Okay, what is there in pillar 2? Okay, firstly tell me everyone. Pillar 1 to 3. Give me the details of pillar 1 to 3. Pillar 1 is what? Everyone, comment section. Pillar 1 is what? It is minimum capital, right? Minimum capital requirements, right? That is pillar 1 requirements. Okay, pillar 2 is what? Pillar 2 supervisory review, right? SREP or SRP. It depends on book to book what we call them. SREP or SRP. And pillar 3. What is pillar 3 related to? Always many of us get confused. Here, pillar 3 is mainly this. The name is discipline, market discipline, right? So market discipline, right? So this here, a few things you need to keep clear in your mind, very clear. What is that? See this. Minimum capital requirement. What is this? This is performed by the individual bank. This is performed by the bank. Okay. Individual bank means SBI, ICICI, HDFC, Federal Bank. All these individual banks perform this function. It will have all the three capitals that credit market ops. Okay. Pillar 2 is always performed by the auditor. Okay. Auditor. Auditor means what? External agency. Now this auditor word is general. It can be RBI also. Anyone who checks the pillar 1 or bank. So under this SRP model, means basically from RBI side, there is a document called as ICAP. Okay, this ICAP comes in pillar 2. Now many of you will get confused. ICAP is under pillar 2 or pillar 1. Here it's like this. ICAP is always with the bank. Bank has to perform the ICAP. RBI will check this ICAP. RBI will check this ICAP whether the bank is sticking to its ICAP. This is a common document given by means it is with RBI for all the banks. Means these what is that? Basically ICAP. ICAP means basically checklist. Have you done this, done this, done this, done this? Is it this? Is it this? All the in detailed points are taken in that. So every bank has to follow the ICAP. If there is any deviation from that ICAP, any deviation, then the bank has to give the explanation why the deviation is there. Because this ICAP is prepared such that the bank should be in a stable position. Now this is pillar 2. Now one more point you need to understand. Why are we working in this pillar 1, pillar 2, or why do you work for a bank? Okay, answer my simple question. For whom do you work in the bank? For whom? Many of you will tell for your bosses, because ultimately you report to your bosses. Okay, so whom do your bosses work for? They work for their senior bosses, then senior, up to what will be the end of this? MD last. Okay, so for whom does the MD work? MD works for board of directors. So for whom does the board of directors work? Board of directors work for the shareholders. So this market discipline is basically transparency for the shareholders. So ultimately remember, whenever you work in the bank, you actually work for the shareholders. You don't work for your bosses or MD or anyone. You work for the shareholders. Simple. And whatever you do, suppose let's say your bank is not performing well in the ICAP, means there is some deviation. So ultimately who will lose in this? If your bank is not performing well, you are having some NPAs, any issues, who will lose in this? Ultimately, this guy will lose, shareholders. So this both pillar 1 and pillar 2 are actually for this pillar 3. Your ultimate aim is pillar 3, not pillar 1 or pillar 2. Got it? So these concepts need to be clear in your mind. Whenever you study these Basel norms, it should be very clear in your mind. What are you working for? Okay. So now let's come to this question. Which are the important pillars? Already I have answered. ICAP is there. SRP is there. See this. B is the answer. Isn't it? Clear? Type yes in the comment section if you have understood this. Okay. Move on. The term SREP and ICAP are dash of pillar 2 stand for. Okay, as a part of this, as a part of pillar 2 stand for. So SREP and ICAP as a part of pillar 2 stand for what? Supervisory review and estimation process and internal capital adequacy assessment process. Supervisory review and evaluation process and internal capital adequacy assessment. Now this is same everywhere. Internal capital, internal, yeah, this is only changed. So this is out. Internal core adequacy. There is nothing called as core adequacy. Oh, so D is out. So A, B and C. Here it is internal capital adequacy assessment process. That is same. So either A, B and C. Now the only question is SREP. Supervisory review and estimation, evaluation and special review. Special review is something out. Okay, so this is also out. So only between A and B now. Supervisory review and estimation, evaluation. Only the crux of the matter is only this, estimation or evaluation. Now you answer this. Everyone, answer me. Is it estimation or evaluation? Let me see the answer from your side. I'll wait. Yeah. Is it estimation or evaluation? Isn't it? Think over it. Estimation or evaluation? Of course, evaluation, isn't it? Evaluation. 1000 times we have studied this topic, means many times I've taken in YT also, in the paid classes also. Supervisory review and evaluation process, that is SREP, and ICAP is what? This internal capital adequacy assessment process. Remember, process. It's after all a process. It will go on changing. See here, what did I say? ICAP is a document which is standard for the bank. Now this standard document will go on changing always, because as the technology changes, new risk will come into the banking system. So this ICAP will also change, isn't it? So the answer is B, SREP. Okay. Which of the following risk is not fully or properly captured in regulatory capital adequacy ratio? What do you mean by this? What is this regulatory capital adequacy ratio? First give me this. Let's forget the question. First give me this answer only. What is capital adequacy ratio? CAR, or we call it, separate name is CRAR. Right, same thing. Capital risk to weighted asset ratio, right, or capital adequacy ratio. So what is the formula? Capital upon RWA, right? RWA. What is the capital? Two capitals, T1 plus T2, right? These two capitals are covered over here. RWA, we cover credit, market and ops. Right, these three risks are covered over here. Right, got it? Clear? So what is the question? Now look at the question. Which risks are not fully covered? Interest rate risk in banking book, credit concentration risk, liquidity risk, all of the above. Very tough. Yeah, really tough, because one of the options is really tough. One you will immediately get it. Which is not covered? Okay, credit concentration. I'll move from easier to tougher. Easier is credit concentration. It's already covered. It is not covered. Okay, in CRAR. CRAR does not say what is concentration risk. See this. If let's say I am having 1 lakh rupees. Okay, 1 lakh rupees. I give the whole loan only to, let's say, one person, one party, one customer, okay, or only one group of customer. Why one customer? Let's say I'll 1 lakh crore. Okay, let's talk about bigger figures. Okay, 1 lakh crores. Okay, now 1 lakh crore I give completely to one company, that is steel industry. Now not company, steel industry. Now there are various companies in this, right? steel industry. It can be Vedanta, it can be Lloyds, it can be this Tata Steel, various industries, but all are in steel. Now tomorrow what happens? This steel industry as such, complete industry, it goes down. Why? Because there are some negative factors. China opens up the economy. China increases the steel production. It can happen. See, this steel industry is mainly dependent on China's market, means China's production. If tomorrow China opens up means enhances the steel production, all the companies in the world will face the problem. Okay? Or the consumption in China decreases, infrastructure consumption, the all steel industry goes down. So this is concentration risk. So best thing is what? 1 lakh crore if I am having, I must distribute it in what? At least four separate 25 each. So that even if steel industry goes down, remaining 3 will cover me up. So credit concentration is not covered in CRAR. Clear? Second one, interest rate risk in the banking book. Very important. This is what I was talking of, the toughest part. Interest rate risk is always in studying BFM. Whenever we study the BFM, we always study the the interest rate risk. I'll just write IRR. Understand this. It's not IRR which we study regularly. Okay, that internal rate of return, and that, remember this internal rate of return. Where did we get this? Yeah, IRR. Can anyone tell me? Where did you get this IRR? There is a parallel word to IRR. There is one more term. What is the term called as? What is it called as? One is IRR, second one in the comment section. Yeah. Whenever you want to get an IRR, I'm not talking of this interest rate risk, internal rate of return. Whenever you want to get the internal rate of return, what should be zero? Something should be zero. NPV should be zero, right? That's what I wanted. IRR, NPV. So this IRR, NPV, we are not talking of this IRR over here. Huh? This is interest rate risk. So I'll just write add N over here, INRR, so that you don't get confused. INRR, okay, interest rate risk. So interest rate risk is always covered for two parts. Always remember in banking. One is means basically banking. This books in the banks are of two parts. Books in the banks are of two parts. Okay, one is trading book, trading, and second is banking book, banking. Okay. So always remember, interest rate risk is covered for trading book. It is never covered for banking book. Why? Because the bonds purchased in the banking book are never sold. They are kept up to maturity. So this is not covered. So A is also the answer, not covered. Liquidity risk, that is also not covered. What is liquidity risk? Liquidity risk is a regular problem for all the banks. Means even you and me face the liquidity risk in life. At the month end, whenever your salary gets ended, means whenever you get the salary, okay, after let's say 20-25 days from that, okay, till the next salary, you are always in the financial crunch, right? So that is liquidity risk. Same thing happens with the bank also. Okay, so these things are not covered in this. So the answer is D over here. Which of the following risks are not fully covered under CRAR? It is all of the above. Interest rate risk in the banking book, credit concentration risk, and liquidity risk. Which of the following risk is fully or properly captured in the CRAR? Now, earlier not captured, now which is captured? So settlement risk, reputational risk, strategic risk, and none of the above. Now it is which of them is captured? Huh? Think of it. Which of them is captured? Now see here, out of these options only, there are many other risks. Credit market ops captured, but are they there? No. Settlement risk is not captured over here. Settlement risk means what? One party performs, other party doesn't perform. Basic logic. Due to many issues might be there. Time zone difference, country issues, anything. Second, reputational risk means something bad comes about your bank in the newspaper. Again, not captured, right? Strategic risk means long-term business. Nokia. Always remember, strategic risk means best example is Nokia. Nokia, there was a time in somewhere in 2004 to 2010, right? Many of you might be remembering this. Every phone was Nokia. Where is Nokia today? Gone. Strategic risk. It didn't look into the coming business, future business. Always thinking of the long-term future. Long-term future. I'm not talking of short-term. Huh? So these all risks are not covered. These are not covered in the CRAR. So what do we want? Which of them is captured? So none of the above. None of the above is captured. Okay. Which of the following statement is correct with regards to the ICAP? Okay. So what is correct? Now always look into the exam whenever you answer the question. What do they want? They want a positive answer or negative answer? Correct or non-correct? So ICAP includes capital adequacy process. ICAP includes projects of capital requirement for the coming year. ICAP includes plans and strategies for meeting capital requirement, and all of these are correct. ICAP. See here, but obvious, if you, some of you have read, ICAP will include what? ICAP includes capital adequacy process. Capital adequacy process, will it include that? ICAP. It will include this, right here. And now I'll give you certain, because many of you might not be knowing the details of ICAP, because we have not studied that much. We generally study for the exams, right? We don't go into the details of ICAPs here. Always remember, ICAP will include, we have one correct, right? Right? So ICAP will always include this capital adequacy process. Always. Capital adequacy means what? Your CRAR should match, should match, should match. Whatever is the given CRAR, generally it is 11.5% now, right? That 9 plus 2.5, 2.5 that capital conservation buffer, so 11.5. So it must surely be there. So ICAP should definitely, means your CRAR should stick to this given norms. ICAP includes projects of capital requirement for the coming year. That is also important. Why is it required? Projects of capital requirement, which require the capital, huge capital, which require the huge capital. So these are included in ICAP. Obviously, this should be there. Why? Because what is ICAP? Okay, tell me one thing about ICAP. I have taken this in the paid class many times. ICAP includes two parts. Always remember. ICAP includes two parts. Okay. One is compliance. Compliance means what? Whatever RBI says, whatever are the norms, are you following this? That is normal thing which everyone understands. We all feel RBI is just for compliance part. But ICAP also includes business. Business means it is not related to compliance. It is related to whether you are able to think of the thing for the future. So here all that strategic risk, just now what we saw, that Nokia example, strategic risk will be covered over here. Then your future problems, immediate future also, long-term future also, both will be captured over here. Okay. So it includes the projects of capital requirement. ICAP includes plans and strategies for meeting capital requirement, obviously. For meeting capital requirements, okay? So answer is all of these. D is the answer, okay? I'll just read the short form now. ICAP is the document which is prepared by the bank in the light of dash of supervisory review process. Now, really difficult. Here, I won't go into all the four principles. There are four principles of ICAP, okay? Means SRP. Four principles are there. I won't go into it over here, okay? Because those are detailed ones. I generally covered them in the paid classes, okay? So under which I can just give you the answer over here, because it's very difficult. You can check it on Google also. So answer is, it's ICAP is in light with what? Principle 1, okay? It is in light with the principle 1. Someday later I'll take this whenever we get some detailed time, because otherwise it will eat up the huge time over here, okay? The responsibility of designing and implementation of ICAP lies with. So whom does the responsibility lie with? Board of Directors. See here, understand, designing and implementation both. Focus on the words. Board of Directors, ALCO, Asset Liability Committee, Risk Management Committee, and Risk Management Department of RBI. So the responsibility lies with whom? See here, ultimately RBI will ask whom? Suppose if there is any problem in the bank, anything happens, whom will RBI ask? RBI will ask with these guys only, Board of Directors. So the responsibility ultimately lies with Board of Directors. Many of you have answered this RMCB. RMCB is there, obviously. But what is RMCB? RMCB is directly reporting to Board of Directors. RMCB is a committee which reports directly to Board of Directors. So ultimately who is responsible? It's Board of Directors. Okay. The implementation of ICAP should be guided by what? Risk appetite of the bank concerned, principle of proportionality, exposure of the bank, all of the above. So it should be with whom? Yeah. It should lie with, here the implementation is guided by principle of proportionality. Okay. Okay, some guys are asking me what is this principle one, at least principle one. Some of them are asking me what is this principle one in the comment section. See this, principle one is basically for the overall capital requirement. Okay, means principle one of this SRP requires the bank to have the overall capital adequacy. Assessing the process, it needs to have the bank to have a process for assessing the overall capital adequacy. Overall, that is principle one. There is one more principle that the auditor or RBI will expect the bank to be above the regular CRAR, means expected CRAR. Then if there is any problem in the bank, this supervisor or the auditor should immediately jump in. I'm giving simple words and try to take the corrective actions. So these are the three principles. One more is there, fourth. Okay. So, every bank is expected to perform as per the given norms. That is fourth. So these are the four principles. First one is this. Okay, that banks to have a process to assess the overall capital adequacy. Okay, that is principle one. That's why I said it's a big topic. We'll take it sometime. Now this question of proportionality. So ICAP is guided by the principle of proportionality. What is this proportionality? See here, it's very simple. Let's say I'll give you two examples. Okay, one is let's say any big bank. Let me call it SBI, biggest bank in India, and one of the biggest in the world also now. So SBI, and second one, let me call it any name. It's a random name given. Aniket Cooperative Bank. Okay, Aniket Cooperative Bank, some bank anywhere, XYZ area. Okay, both are banks, both are under RBI. Okay, Aniket Cooperative Bank. What is the job of Aniket Cooperative Bank? Simple, loans, all that, term loan, CC, only these two, term loan, CC, and what? Only two. Okay, term loan, CC, TLCC, CC, deposits. Saving current FD, right? Saving current FD, SB, CA, and FD, right? Simple job. Now this bank is dealing in only these two things. No LC, no guarantee, no derivatives, nothing. But SBI is having 1,000 things: loans, deposit, derivatives, then traded derivatives, untraded derivatives, right? Then what? LC, funded, non-funded, right? Means this. What, takeout finance, all these things. Now whose overall this circumference or area is bigger? SBI is having much bigger area, whereas this bank is having only this area, right? This much area. Now tell me, can you apply the same rules to SBI and this Aniket Cooperative Bank? No, you can't. Because the problem is what? Look at the structure of this bank or overall functioning of this bank, and look at the overall functioning of this bank. This is called as proportionality. The bigger the bank, the complex are the problem, the complex are the products, and accordingly we have to change it, right? We have to change the ICAP also. The same ICAP document for Aniket Cooperative and same ICAP for SBI. SBI will laugh at it. It will say, what is this, right? Move on. As per the ICAP, the capital plan of the bank should outline capital needs, anticipated capital utilization, desired level of capital, limits related to capital, general contingency plan. Everything is included, man, isn't it? By the name itself you can see, right? So ninth answer is what? Give it in the comment section, everyone. Fast. Comment section. Fast. Name itself, look at the points itself. Capital needs, anticipated capital utilization, desired level of capital, limits related to capital. By now by now all of you know that these things are required, right? So answer is A. Simple one. Move on. The use of framework and dash framework. This is dash, I think. Yeah. The use of dash framework. The use of dash framework can provide the management of the bank a better understanding of the likely exposure of the bank in extreme circumstances. Look at this. Likely exposure of the bank, likely in extreme circumstances, means what? Whenever things which have not come up till now earlier may come up someday. Like for example, If I had asked you in 2019 August 2019, if I would have asked you, do you think the world will stop for next 2 years? Means if I had asked you in August 2019, do you think the world will stop in next 2 years? No, we would have called myself a fool. How can this happen? Nothing can happen. Can the whole world stop? No. But what happened? It stopped. World stopped. 2020 COVID, 2021 COVID. The whole world stopped. So these are extreme situations which have not been seen up till now. They can happen. This is called as stress testing. Stress. Okay. Other one is back testing. Back is a regular thing. Okay. So coming back, the use of dash framework will help the bank to look into the extreme issues. So what are these? ICAP, SREP, scenario analysis, and stress testing. I think I gave you the answer. Yeah, isn't it? I gave you the answer, right? These are extreme situations. These are given by stress, right? Stress testing. This is always for, stress testing is always for something which has not happened up till now and may happen. In this stress testing, we have scenario analysis. Always remember, stress testing always moves hand in hand with scenario analysis. Okay. Last one. Sorry, not last one. I was in different thing. Okay, chalo. Next one. The first objective of ICAP is, what is the first objective of ICAP? To provide adequate capital, to mitigate all possible risks, to identify all material risk, and all of the above. To provide adequate capital. Can any bank provide an adequate capital? It can never. What do you mean by adequate capital? Adequate capital means, you can say that I'll have a complete funds with me for any situation. Do you know the situation? You don't know the situation. So you can't have adequate capital. So this is out. You can only make the process. See here, ICAP, understand the word ICAP, process. You can only have the process better, so that if anything happens tomorrow, stress testing, you can definitely provide for the capital at that time. Mitigate all possible risk. Can you mitigate the risk? Never. Mitigate all possible means what? What all risk can come in future, I'll mitigate it. Have you seen the risk? Same thing, August 19. Had you seen COVID? August 19. Did you see COVID at that time? You can't. So out. Identify all the material risks. Here, identify all the material risk. Material means what? This is known as the present situation. Material word means present. Identify all the present situations. Of course, in August 19, you couldn't have predicted COVID. But in that scenario, whatever was possible at that time, whatever risks were available at that time, that you could have predicted. So that is the answer. C. Okay? Clear? Type yes in the comment section if you have understood here up till now. Everyone type yes. Okay? So that was the YT series for you. Now before going, let me tell you, join the batches immediately. See here, all the numericals, objective questions, case studies, everything is covered in the batches. You can join the Mahapack also. Let me show you. Go to Adda 24/7. I'll always suggest you to go through the app. In the app, you get 1% extra using the coin systems. Okay. Here, go to Adda 24/7. Click on JIB and CIB. Click on CIB June 24. Here you will see the batches. Look at this. AIM batch. Then you can join the batch AIM batch. It covers all the numericals, objective questions, case studies. Click on this. Look at this. Ebooks, test series, online live classes, counseling, live recorded session, everything is available. Click on the ebooks. You get subject wise ebooks over here. Now if you click on each subject, you get module wise, chapter wise. See this, chapter wise, chapter 3, chapter 11, chapter 19. So you're getting chapter wise. Similarly, test also. If you go for the tests are also available module wise and chapter wise. Look at this, chapter wise tests are also available. So that's why go for it immediately, these batches. Okay. Also you can join the Mahapack. In the Mahapack you are getting multiple batches per subject. Okay. So that is also one important part, multiple batches per subject. Okay. So join the Mahapack also. Anything here, you can join the batch, AIM batch or the Mahapack, anything, but do join because exams are near. And use the code Y432. Remember, click on buy now, put the code Y432 to get the maximum discounts. Just click on apply, click on continue, and you'll get the discounts. Okay, whatever discounts are available, you can immediately avail, because such offers don't come every now and then. Okay.